Welcome back to the show, everybody. Listen to these headlines. Brad Garlinghouse commenting on the state of affairs of this market, and there's a lot there to talk about. Looks like William Hinman may not have only perjured himself, as we've covered the potential of that in the SEC Ripple case, but may have also violated the principles of the SEC as well. EU pulling away from the US dollar, creating a new financial system. What in the world is going on? The Digital Pound Foundation, ISO 20022, and regulation, another green light for crypto and credit unions right here in the USA. Come on in. Somebody roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradleyAbove, and everything that we're talking about here today. $2.180 trillion market cap. We are off by over 4% this morning collectively. Looking right here, Bitcoin now 47,100 plus, Ethereum 3,800 plus. And we see Solana right now at $175 and change. Cardano is $1.23. XRP is 80 cents. Let's take a look right now at the range of price here, ladies and gentlemen. We see we are ranging from 0.8053 on the bottom and 0.8334 on the top side. Buying time is here. Yeah, we don't buy when the market's going up. We buy the dip, and that's what we've been in. And I tell you right now that Link2 is in such support of XRP being a currency. They are offering that if you have an Uphold wallet, you can get $1,000 XRP back if you buy private equity from Link2 through your Uphold wallet. And if you purchase Ripple private equity from them, you will get $1,500 worth of XRP back. And all of this is being done not only in support of you becoming a customer, but also the notion and understanding that XRP is a currency, and that action really exercises that understanding. That is amazing stuff that Link2 is doing. Great products, and there's new stuff on there as well, so make sure you go check it out. It doesn't last long. John Deaton says, in the meantime, in the United States, Gary Gensler warns everyone that Bitcoin and cryptocurrency's primary use case is to fund terrorism, ransomware, and drug transactions, and therefore he plans to bring many more enforcement actions burying innovation in litigation, which is exactly what we've seen with the SEC versus Ripple case. He's highlighting here the breaking news here from Chamalia Report that says Myanmar has accepted the Chinese yuan as an official settlement currency for the border trade with China, moving away from the reliance of the US dollar. I tell you, things are changing rapidly, ladies and gentlemen. You are going to see more of this in just a few moments. But while we're here, shout out to John Deaton and the show he did with Patrick Bet-David. If you haven't seen that podcast, you need to go watch it. Also going to be sharing some information you've seen before on Twitter and asking you to retweet it, because we want to get him on Joe Rogan's show. Let's get him on another huge voice, and Joe Rogan will get to the bottom of this just like Patrick Bet-David did, and many, many other people need to be aware of what's going on. And it speaks to this article right here that was shared by Brad Garlinghouse. He says, Siri, play Ironic by Alanis Morissette, right? And the opinion piece here is from none other than Jay Clayton, the same gentleman who dropped the case almost 1 year ago to the day, right? Almost 1 year ago to the day here. And the piece goes on to tell you, I'm not going to read it to you so you can breathe a sigh of relief, but the Bitcoin of other novel tokenized assets and all the promise of what crypto and blockchain can bring and tokenizing assets. He goes through the whole thing and sounds so cheery about it all. But what's so amazing is at the end of this, the iceberg above and below the surface is much bigger than we saw just a few years ago. It's time for public and private partnerships to ensure that it floats in the direction of our long-term commitment to free and fair markets, global financial stability, and consumer welfare in every country. This is Jay Clayton, the same guy that sued Ripple, claiming after all the years they allowed it to do what it was doing. after they partnered with MoneyGram and the SEC approved the deal, knowing that MoneyGram was going to use XRP as a currency between the U.S. and Mexican corridor. This guy, I tell you, this guy is now trying to write a piece which looks to me, to be perfectly honest, like he's trying to save face here and act like he's been a part of this whole bringing the movement to market. It's embarrassing. It's embarrassing. And I'm going to tell you why it's embarrassing. Because what do we know right here? First of all, let's take a look at this. Because this is exactly what he said he didn't do. Jay Clayton said that he had no knowledge of Apollo, but when he was the SEC chair, he actually met with Apollo right here. But he told us on CNBC, I didn't know who they were before I went to work with them. Well, that in fact is not true, right? So that is a problem there. Then we have William Hinman, who actually wrote the letter to give the Ethereum free pass, right? Well, here's a problem here. Whistleblower alert. Sunday Saucy deserves some money here. You're damn right he does, because he finds Title V, which says right here that you are not allowed to profit from private investment and private gain. Any employee shall not use his public office for his own private gain. So right there, for any endorsement of any or any product, service, or enterprise, or the private gain of friends, relatives, or persons with whom the employee is affiliated in a non-governmental capacity. Well, that's exactly what happened here. He wrote the speech, and then, of course, the SEC was using it and directing people as if it was adopted guidance. And then, of course, as we know of late here, publicly, they've tried to distance themselves from that position, saying it was William Hinman's personal opinion. Well, if it was his personal opinion, then this should not be where he could profit in private gain. And that's exactly what happened, too. $15 million, I believe it was. That is a problem going forward. Well, we got a lot more to talk about, ladies and gentlemen. This is also the American Bar Association, who believed that the letter from William Hinman was really from the SEC staff. This is the American Bar Association. Given the SEC staff's position on Ether, not William Hinman, the SEC staff's position on Ether, the American Bar Association for Lawyers has even interpreted that William Hinman's speech was not a personal opinion at the time. This gets so ugly and so bad so quickly, and it just keeps getting worse every day. Again, find any piece of information, take this piece of information, however you want to do it. Let's tag Joe Rogan and get John Deaton on that show. He needs another level of voice here and to continue to get this problem heard by the right people. That is for sure. Digital Pound Foundation consideration from wider CBDC use cases is needed on a collaborative basis. This is the role we intend to fulfill in convening a board of a diverse set of stakeholders, which include Ripple, Accenture, who originally back in the day gave the green light in the financial community for Ripple. Yeah, we had Diana Adachi on the show from Accenture at the time, who actually was the one that looked over them in their vetting process to bring them into the financial community. Pretty amazing stuff going on here. Understanding that Digital Pound Foundation is really massive, right? That is going to be the digital pound for the UK. I mean, that's incredible. I covered this yesterday. Stay with me where this is going. This is getting heavier all the time. Russia and China are going to build a new financial system and get away from the dollar and SWIFT. They're tired of the sanctions. Well, guess who else is saying that now in their own way? It's the European Union. They seek to cut reliance on the U.S. dollar and other financial centers. Check this out. The European Commission said on Tuesday it would seek to boost the international role of the euro and build European financial infrastructure so that the EU becomes more independent of outside financial centers and the dominance of the US dollar. So now we got Russia, now we got China, now we got the EU, which is like 17 or 19 nations there. This is not a small matter, ladies and gentlemen. This is all pointing to a new financial system. Everybody's getting on their own platform. Sounds like to me we may need a bridge asset for all the money if this keeps up. USD, Euro, Japanese yen, so on and so on. You know, is it so far-fetched? We are seeing the nations and regions, the European Union, 17, 19 countries there. Russia and China, 20, 21, right? I mean, there you have it. You're seeing it. The UK, 22, 23. I mean, we're getting there, right? This is happening. And in order to have their own new financial system that's going to be involving distributed ledger technology, you're going to need to collateralize these things so it can have the value represented in the digital tokenized world. Take a listen here. With the withdrawal from the UK and the EU, there's strong need for opportunity to develop domestic market infrastructures. Infrastructure, that's what's been the whole time that is going on with the shiny object of Bitcoin, Dogecoin, and other meme coins going on here. We've been watching the real long ball, real long players that are going to be here, I believe, help to build the infrastructure for the new financial system here. The EU is still smarting from the fallout of 2018, from the last administration withdrew from nuclear deal and the Iran and reimposed sanctions, leaving the Europeans unable to continue to trade with Iran under the terms of the accord. EU-based securities depository Clearstream, Euroclear were affected by that deal. And it says here, EU-based SWIFT bank payment and messaging system had to disconnect from the Iranian banks. The EU should develop measures to shield the EU operators in the event of third country compels the EU-based financial market infrastructures to comply with unilaterally adopted sanctions. They're pointing to SWIFT, and we're going to get away from it because we don't want to do all the time what the U.S. says we need to do when it comes to sanctions. But the EU executive arm offered no immediate solution, saying it only first assesses the EU vulnerabilities, develop tools to counteract. It says here the Commission said that to strengthen the effectiveness of the EU sanctions regime, it would review how they would circumvent, including via cryptocurrencies and stable coins, and make proposals in the coming year. Think about this. They're telling us it's going to happen. That's what they're telling us here. You know, this is an amazing article. You should read the entire thing here. There's no doubt about it. It also talks about the possible technical issues related to shifting derivatives positions from London to the EU. We know about the new London exchange for settling derivatives in a digital way. Launching a digital euro, they talk about here from the ECB. It's all coming. That's a part of the new market infrastructure is what we're talking about here. And this is getting bigger and bigger by the day, ladies and gentlemen. When looking to company takeovers, the Commission would also check whether the EU company more prone to complying with sanctions from third-party countries. Paper said there's also a need to cut the bloc's excessive reliance on foreign investments and funding in foreign currencies. That includes the U.S. dollar. This is getting bigger by the day. And what do we know about SWIFT? SWIFT obviously struggling to stay in the game here because a lot of people in a lot of countries, Russia, China, the 17, 19 countries that represent the EU, want to get away from SWIFT. They don't want to exercise all the sanctions that the U.S. says to do. Well, the new Global De facto Modern Payment Standard, which is ISO 20022, will go live less than a year. Now, who's excited about that? Yeah. They show it right here. They've talked about it. We've covered it many times. But these are the different payment methods and networks around the world here. And you see the go live date. And we know already they are onboarding customers who are ready and prepared and have their legacy systems updated and prepared to move into this new payment language and payment standard. And, there's a lot here, ladies and gentlemen. And let's get back to the U.S. now, because this gets very, very big right here. Federal regulators say credit unions can partner with crypto providers. Really? Well, we knew this about the OCC, but this is different. Federally insured credit unions, FICUs, can partner with third-party digital asset service providers, the National Credit Union Administration announced Thursday. This includes facilitating member relationships with third parties that allow FICU members to buy, sell, and hold various uninsured digital assets with the third-party provider outside of FICU, right? This is amazing. FICU being the federally insured credit unions, right? This is amazing, ladies and gentlemen. You're getting a further green light here. The NCUA is a U.S. regulator that oversees credit unions, acting as a counterpart to the Office of Comptroller of Currency. So you see how this goes, a chain of command here, which regulates national banks. The NCUA said it wants to offer clarity around the existing authority of FICUs. It says here, when it comes to building relationships with third-party digital asset providers, NCUA said further guidance may be necessary as digital assets technologies evolve, and the association will continue to study and address the issue. It's coming. No, it's not. It's here. How about that one? It's here. They just got the green light again. Now, what's interesting about this is if we go back to the Consumer Financial Protection Bureau from July of 2020, this is what we find here. Remember this? The Bureau has continued to monitor remittance transfer markets since the publication of the assessment report and observes that these developments continue to progress. The continued growth and expanding functionality of SWIFT, a global payment innovation GPI tracking product, which can increase the amount of upfront information available to sending institutions, and the expansion of major payment card networks. Capacity to support cross-border payments. The continued growth of fintech non-bank remittance transfer provider and their future or further expansion into partnerships and other relationships with banks and credit unions, which allows such entities to tap into closed network payment systems that non-bank remittance transfer providers have developed. Get ready. The continued growth and expanding partnerships of virtual currency companies such as Ripple, which offer both payment messaging platform to support cross-border payments and money transfers, as well as proprietary virtual currency XRP, which can be used to effect settlement of those transfers. You know, we're not crazy. This is happening. They just highlighted that they're probably going to, when they fire this up with the buy, sell, and hold and allow cryptos and credit unions have been cleared by the CFPB, which is an enforcement agency, a financial enforcement agency. They're probably going to use XRP to settle all this and run across those protocols. That's what this document says here, right? At least for cross-border. And what do we know? The ISO 20022 de facto global standard modern payments is also where Ripple sits on that standards body committee. The first member focused on distributed ledger technology, and we know it'll probably all take place on a Ripple private ledger. That's going to do it for me. This is getting very interesting very quickly, and all of this is happening while U.S. retail investors are largely handcuffed from getting XRP in the manner we did more than a year ago. Hit that like and subscribe, leave a comment below. It's coming, ladies and gentlemen. I'll catch you on the next one.